Good afternoon from TFNN. Welcome to September 13th, Tom O'Brien Show. Of course, I'm your guest host, Steve Rhodes, filling in for Tom for the afternoon. Hope everyone is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers have been communicating to you and I, will have communicated to you and I as of today's close. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we had the Dow close down 258 points. She's trading out at 18,066. S&P off 32 points, closing out at 2127. NASDAQ Composite down 56 points. She closed out at 5155. Russell 2000 down 23 points, closing at 1212. Gold is trading back $4 at 1321. Silver off 5 pennies, trading at 1895. Light sweet crude down $1.34, trading out at 44.95. So what did the markets do today? Interestingly enough, if you were catching that, now I do the show from 1 to 2 o'clock in the afternoon. At between that time, during that time frame, we noticed on a shorter term chart, 30-minute chart, that the market had formed a short-term bottom. Now, what I was referring to is what we like to refer to as a Gartley buy pattern, because that was developed by H.M. Gartley himself. And in order to have that pattern, what you want to see is a trend that was previously in place. And I'm just going from the bounce that took place yesterday morning. This is a 30-minute NQ chart. So we're just going to update people on where we're at with that. And in the case of the NQ, it went from the price area right around the 46.30-ish area right up to about 47.72. And so in a Gartley pattern, you're looking for a nice move. Yesterday was a nice move. So we're taking a look at currently where we're at. And then you're looking for that lightning bolt, that A to B equals CD pattern in the opposite direction in order to identify a buy. So we're going to go identify, even with the market being off 258 points, what does it actually mean out here? Well, we're taking a look at the NQ. And we can see that from the high here yesterday at 4 o'clock's close, there was an A to B equals CD that went ahead and completed right at 1:30 this afternoon. Now, the reason that I say completed is because it formed a nice, big, old bullish engulfing candle. What is that? That is a candle when market's moving lower, and it engulfs the prior bodies. You see, the body of a candle is the essence of price. The wicks inside a candle, or the upper or lower shadows, that's just the extreme emotion that occurred during that time frame. In this case here, it's a 30-minute time frame. So you've got a confirmed A to B, you've got a confirmed Gartley buy pattern, was never violated all day. We also happen to have this, what I like to refer to as a seventh wave move to the downside. Those often can be the places where the market makes a turn. So where is it that the NQ ought to trade to? So if we take a look at this, I'm going to switch over to the 30-minute chart. So this way you can prepare for what might take place overnight out here. And this is going to be taking a look at the NASDAQ. And the first target that you're going to be looking for is 47.41. It's really 47.40.63, but we're going to round that to 47.41. That is where price should move to. If price gets above 47.44, anticipate the move to 47.56, and above that, 47.72. You see, every Gartley pattern has 5 different outcomes. We've already attained outcome number 1, which is nothing more than a dead cat bounce, a 0.382 retracement. We're trading at that area right now, which is 47.27. So it's logical to me that the next move should be 47.44, maybe 47.46. Would be outcome number 3. Outcome number 4, 47.72. And outcome number 5 is that you trade above that 47.72 and you form an A to B equals CD to the upside. You may say, how in the heck could that possibly happen? Well, let's go take a look at the daily charts and see what their message is. And I want to say thank you to AG in our Tiger's Den out here, because he was one that actually alerted me to this earlier today. And that is this. This chart, if you're watching us on Tiger TV, let me explain what you're looking at. If you're not, and you're listening on your car, your mobile device, I'll explain to you what we're looking at here, which is a chart of the S&P 500. That's the upper portion of my screen. The panel just down below happens to be the VIX index one-day rate of change. If you caught my show yesterday or you've caught my prior shows, you know that I like to pay attention to the percentage change in the volatility index when it exceeds 10%, so 10% or more, basically more than 10%, or a negative 10% or less. Because they simply have certain meaning when we take a look at the patterns out there. And that's really what we're taking a look at, is the emotion of the market. And how is it that you and I can learn from it and trade based upon it? Well, the very bottom panel of my chart is the TRIN index, so Richard Arm's index out here. And on days when you have a close above 2, and by the way, today's close was 3.18. That typically tells you, not that typically, my goodness, it tells you that the market is oversold. So in an oversold market, should you anticipate a bounce? My goodness, we should. And here what we have, actually we've had 3 days where we've seen changes in the volatility index greater than 10%. That was Friday, and that is today. And less than a minus 10%, that was yesterday out there, which does not occur often. In fact, during the last about 8,000 trading sessions since 1990, we've only seen that occur now 9 times. So there's not enough of a sample size, even though it's 8,000 trading sessions. 9 instances is not enough for you and I to be able to draw a conclusion out here. So we're just simply going to go ahead and park that out the window. But what we can take a look at is a market that is in an uptrend. And we're clearly inside an uptrend right now. If you take a look at the S&P 500, just simply coming off of the lows out here from February of 2012, you can see a nice little rising price channel. Price inside the S&P 500 has not even made its way down there. So what should we anticipate? Here, if we take a look at the last time that we saw the VIX index have a one-day rate of change greater than 10%, and the volatility and the TRIN index close above 2, that happened to be on the trading session of June 24th. Now, the market actually moved lower on that very next trading session and found support. That was at the bottom of that rising price channel. So even if the Gartley buy pattern that you and I just looked at inside the market fails and price moves lower, what we will anticipate is price will go ahead and find support at the bottom of that rising price channel. Price-wise, inside the S&P 500, tomorrow would be somewhere right around the 2101 level. So we're just going to call it 2100. But oftentimes what you will see when you have a TRIN index that is 2.0 or above and a VIX index reading that is greater than 10%, and today's, by the way, that was up at the level of 18.6%, you will see a bounce. Quite frankly, you will see a bounce or bottom. I'm going to give you both the bullish side and the bearish side. I'm going to go ahead and provide to you the longer-term outlook, what it is that you want to be taking a look at, because we're going to take a look at presidential patterns. So why don't we do that when we get back from this next breakout here? If you want to understand who's going to win the election, this is not a prognostication. This is about what the market can tell us over history, the last 84 years worth of election cycles. Stay tuned, folks. This is Steve Rhodes with TFNN. We'll be right back.